What's going on? Good afternoon, everybody. Welcome back. And it was a pretty boring day. Not non-event. Nothing really to sneeze about or talk about. Oh shit, I'm sorry, wrong script.
Something happened today?
I'm sorry, wrong script. Guys, if you didn't know, inflation's over. There's no more inflation. That's it. That's it. No more inflation. So, welcome back. Obviously, if you watched this morning, great day of trading, fun day of trading. But what's up, Mike? How are you doing today?
Oh, you talking to me?
Yeah.
I thought there was somebody else in the room.
Yeah.
No, good day. Good day. It was a good day. Positive print caught us off guard. As you know, we were expecting a hot print. But as we say, as traders, you got to come in without a bias, and you got to have your game plan ready. And I think you probably do the best, Ty, as far as just be able to trade on the swivel like that, and with your buy stops and stuff. But
Yeah.
the rest of us minions have to look for a nice little entry level.
Yeah, it's sometimes price action gives you some little clues, and I was positioned in silver and the Dow before the print came out, and I was right. I was right. 50-50 chance, and I was right, baby.
Good for you, man.
But,
hey, roll that dice.
That's right. Come on now. So hey, scared money make no money.
That's true. That's true.
Oh, man. But yeah, Mel, you're right. Soft landing incoming. Just kidding.
Yeah, I mean, this inflation narrative that's going on today, and then the market reaction. I mean, we kind of talked about the market reaction, and you kind of laughed at me when I gave the level it could go up to.
I did. I thought you were joking for a second.
You thought I was joking. What did I do with that number? I think your daughter came in the office and threw it away.
Probably.
But I think it went past that number almost.
Dude, I was like, only way the fucking market's hitting that number is if we get an extremely soft extremely soft number, and holy shit. You got it.
I got it, man. I know how to pick my levels.
Yeah.
I tell you one thing I do know, man. I know how to pick my levels. Okay, and wow, that's all I got to say. But going back to the inflation narrative. Okay, if you think about it, it's really not that big of a deal what happened. I mean, because you got to think about inflation has to. It's harder and harder to beat because now you're going a year. You're going a year in the past, right? Well, now we're getting closer to comparing ourselves to a higher number when inflation started. And October was really the first month that we saw an uptick in inflation and became an important narrative. So the fact that we only came in at 0.4 on the headline month over month instead of 0.6, to me, that's not that much to really talk about. It's not like there's some big deal that just happened here and inflation has gone away. I mean, remember the Fed's target is 2%, but bringing to that point, and Bespoke put a good chart. I think Mal put it into the Discord room, but as we go now, each month inflation, the number we're comparing against is so much higher that inflation it will automatically come down, even if it's not coming down.
Yeah, no, exactly. You're exactly right. So although it's it seems like inflation, it's great. It just pretty much stayed as high as it was prior. So it really is still highly elevated here.
Yeah, I mean, and you're getting a mixed bag from the Fed governors and stuff like that. But, I mean, look, Daly, sees nothing in CPI to change the trajectory, which I agree. This changes nothing. Now, we are seeing the Fed futures change dramatically. We're now pricing in 84% pricing in a 50 basis point rate hike in December instead of 75 basis points. But, market's getting a nice little rally out of this, so enjoy it for what it is. And, where we go from here? Well, it's all about levels, right? And it's all about reaction. It's just like the way we advise going into today's trading action. You know, it was all pre-market action, but once the market opened, it's like, okay, what do we do here? You got to wait and see when the dip buyers come in if they're able to defend, and if sellers have attracted enough and they overwhelm the buyers. That's just as simple as it is, right?
Right. Yeah.
So tough. Interesting day. Got some good trades off during the trading day, but some good money made before the bell even rang.
Oh yeah, it's most money was should have been maybe. I mean, look, after the market opened, it more or less just did a grind in one direction. So
yeah,
but yeah. Just throw the numbers out there. Core CPI month-to-month came in at 0.3% from expected 0.5%. CPI year-over-year 7.7% from expected 7.9%. And CPI, headline CPI month-over-month, 0.4% from 0.6%. Unemployment claims came in at 225,000.
Yeah, Mark, you got to look at the numbers. Sometimes I think you're in an alternative universe. Okay, gas prices were up. If you look at the print, gas prices were up. Gas prices were up 21 days in a row in October. Okay, what offset what we didn't count on, and our analysis of the CPI when we broke it down this morning was spot on. What we didn't count on was natural gas offset. Natural gas was a huge offset.
Right.
Rents rising, just like we said it would do. And the big kicker was medical care and insurance. Okay? Medical care and insurance, and we talked about used cars, how, they were a riser last print, but that they had dropped in October. So we knew used cars were going to happen. We knew gas was going to go up. But the big thing is that we didn't account for the big drop in natural gas, and I didn't account for the insurance and the medical care dropping. And again, a lot of that stuff is seasonally adjusted. That again, that's kind of why Goldman I think came in a little bit lower on their numbers as well. So predicting tops, bottoms, all that stuff, that's fool's errand, like we know. The key is just you got to react to what, nobody has a magic ball. You just got to react to and understand how to react, right, Ty, to what's going on in the markets.
Yeah, exactly. Always adapting. And I mean, look, it's just like the Fed said, even like what Mal's saying, they even said, look, yes, there was a single, better CPI print, but this has happened before, so we got to make sure CPI actually stabilizes here before we start making some rash decisions. So this isn't enough to change the Fed's trajectory, obviously, but if we get a few, couple, CPI prints basing, then maybe we'll talk. But for now, it's just the single print out in the ocean that, cooled slightly.
Yeah, guys, look, where we're headed, right? Okay, and nobody's talking about this, but where we're headed. You got lower growth, right? And interest rates are going to eventually start falling because of recession. We're heading to deflation. And that's something that's worse than anything that you would want from the inflationary standpoint. But we won't talk about that. That's for later. That's like the back wave, right?
Yeah.
Comes back and whips us up.
Exactly.
But enjoy it for what it is. Nice bounce. Look, we complained, because typically to get a bottom, and we talked about this, to get a bear market, there has never been a bear market bottom where we didn't have like a limit down day to mark that bottom, okay, within that process. And we never seen the VIX, we never had a bear market bottom where we haven't had, the VIX spiking to $50 or $70, okay?
Yeah.
So
I would say, the VIX is still it's dropping like a fucking rock,
Yeah, which you would expect today because, the event's off and, we talked about the put call ratio. Everybody was positioned for this. But what's interesting, and to show you, this is, and we talked about these bear market rallies, right? We call them bear market raids. And, these rallies are fierce. And to what really would get in the bear's crawl would really, you want to piss Mal off? Okay. Limit up on QQQ is 7%. We're at 6%.
Oh my God.
So
That's funny.
we are 1% away on the Qs from being limit up.
Wow. That's impressive.
So
Well, it had some catching up to do.
I thought that I thought that was funny, man. That's where you get a pause in the market. They basically shut trading down and reassess things. And we've been always remember how many times I say, "Oh, maybe we get a limit down day today. Maybe we get a limit down day today." But just that doesn't happen. So the indignity of it all if we got a limit up day on freaking tech.
Yeah. But why don't you show us the charts? Pull up the charts and kind of take a look at the levels and where we're going from here.
I'm going home.
Yeah.
That's where I'm going from here. But anyhow, let's take a look at these charts. I mean, you can see here this weekly chart on the trend line. So we had a nice week here 2 weeks ago. It's a sandwich, Ty. Okay?
Oh, yeah.
It's the sandwich it's the hot dog pattern. Okay? I forget, I got to go back to my technical analysis books. But what's the hot dog pattern say? We got a bun here, and a big freaking hot dog.
Well, it probably means it goes down because it goes right at the fucking shitter. So you.
Yeah, hot dogs go right through you. Is that what you're trying to tell me?
Go right through you.
So we're in the hot dog pattern. Interesting. We are butting up against this trend line here. So, it's interesting where we kind of stalled out. If you look at the daily chart, we're back into this consolidative target zone that we talked about before. And so, amazing in here. So, the 100, we basically gapped above the 50, we left all this nonsense behind, and we gapped up here. So we're in this target zone and nice area. But what's interesting to me, Ty, is look, we kind of getting rejected right in here on the 4-hour chart. So what you see here?
Yeah, so I'm gonna be watching where we're here now because typically when you have the break of structure and then you have a 100% move the way you did, so that it came back 100% of the way, it's in mark for one of two things: a really strong break down to the downside in this case, if it's going to respect the 100% move. If it doesn't respect this level and it breaks it, then look, we're in for a break of structure. And we're going to have probably a temporary, upswing back up towards, 400s and stuff. So definitely will be watching this high area here because this is an area that we've had a lot of rejection before, and we could have something similar to back in August if we do break it. So it'll be interesting.
It is interesting that we kind of got these. It's like a cage. We got these bars here, these large 4-hour bars, Tyler.
Yep.
I mean, Jesus. I think this was the Halloween trade, but it's just not looking ugly. Anyhow, interesting here. We talked about on the 15-minute that, watch this area, and we kind of pulled right, we gapped up, broke above it. And now we kind of just had our retest of this area. And now we're kind of, going back up. But let's see if that holds. That would be interesting. Anyhow, the daily chart, almost, maybe if you're born alum, you kind of are seeing in your future a head and shoulders pattern forming here.
There it is. I see it.
So we'll let our resident, and see if you flatten it out. It doesn't look like a head and shoulders pattern. But
oh no, I can see it. There it is.
You can see it, right?
Yep.
So we'll see. We'll let born alum tell us if it's.
He said, "Yeah, it's there." So it's official.
There. So. You're looking at the ES, same thing, kind of sitting there looking like that head and shoulders pattern. If it truly was a head and shoulders pattern, I mean, to me, 38.66 is where I would think I'd be targeting a drop. And if we were to get a drop in, these days we talk about, trading. And, if you were shorting, through here, you're not shorting for swing trades in here. You're shorting for maybe just, basically what you're doing is picking up pennies in front of a steamroller.
Right.
I think Laban calls it, right? And so, you want to take the ride, man. Stop. So many traders looking for the pennies. Now, I did actually execute a couple shorts today, but again, short pullback trades to just, pull some alpha. But really, when you get a move like this, you don't want to fight the tide. And the tide right here is the institutions. There's a lot of people that were sitting short. We know going into this print. So, it's all about positioning. The CPI inflationary numbers were not that good. Do I have to say it again? Okay. They're not good. 7.7% is not good.
Yeah, and that's why I think that I wouldn't be surprised at all if we retrace this move and continue down from here after this 100% retracement. Because, in the grand scheme of things, look, it's not going to cause any change in the Fed's pace unless we get a couple of these prints. So this is just, one drop in the barrel. So it's not, it's not great. So I think that's just a reactionary move before we continue back lower.
Yeah. They were not good. So, what you're seeing today is a result of poor positioning. You got the street,
right.
You got the street, the professionals positioned on the wrong side of the tape. We came in position for a red hot CPI. Okay. So, if you got the street position against the wrong side of the tape, you had a lot of shorts that had to unwind. You got a lot of puts that can unwind. Now, look, I could see this possibly run into OpEx next week. I could absolutely see it happen, but I could also see it pull back. But for me, a pullback, you can't expect much today. And to me, the max I would expect, and if you got lucky, would be to the 38.66 level. What do you think, Ty, in that area?
Yeah, no, looks like
good level.
I'm good with you on that.
You do have a lot. I'm sure you got a lot of single prints in here that got to be rectified and stuff, but you got to be careful trying to go against a strong tape. Just I know inherently it's in your nature sometimes, but you got to be careful on that. So 39, we kind of topped out right up here at 39.35. You got some levels up top. I actually thought we would possibly challenge 39.55 or 39, but we kind of paused in here. So let's see what happens with the market going forward. Tech. We told you tech's up, 6%. Well, they're kind of butting their heads up against this 50 moving average. So, and then you got all this nonsense in here. So for me, tech, the number to watch is 280.21 on tech. And I think that would be a nice little lid. IWM. Well, Ty, we laminated about the fact that they didn't retest the 200. They were so close.
Yeah.
Ty, look where we are again.
We're reaching for it.
Yeah. So, actually seeing this chart now, and this first time I pulled it up, makes me think that we got more upside. I think this is like a magnet, don't you think?
Yeah.
Yeah. So,
sure.
Yeah, but be careful. Dow is our new breakout. Pretty soon, Dow will be at all-time highs.
Yes, right, baby. At all-time highs.
Who said we're not going to all-time highs? You look at the monthly chart. 37,000 in our sights. So, what's interesting about, and let me see if I can get some of these. It doesn't come off. Oh well, screw it. What's interesting about this monthly chart here is you kind of having a breakout month on the Dow. Right there, as far as you had the historic month here of October, which we talked about, which took us right off this trend line in here, and now we're kind of piercing these highs, and it looks like the Dow's almost in breakout mode.
I'm here for it.
I know you are. The dollar, I know you're going to talk about it, so I won't talk about it. Rates. Breaking this active sequence. So if we were swing trading this would be the clue right here. This break in here around 3.966 would have been our out. As far as from this active sequence. So you kind of got these rolling over. You still got the 50. So technically it needs to break the 50, but this is definitely a change of character. Nice down day and up day on bonds. And yesterday we had a bad 10-year auction. Today we had a really good 30-year auction. So bonds, what a difference a day makes in the bond market. VIX, dropping off from the 200. I think anybody that understands VIX and trades VIX understands that, once the event happens, you're going to typically get that unwind. So nice little unwind there in the VIX. And I guess we're going for Santa, right? What Mo said.
Looks like it.
Looks like it. But that's it for me, Ty. Curious about the dollar.
Yeah, it's gonna be. I'm excited to talk about this. And I wanted to point out something on the SPY chart that we talked about a lot and we haven't talked about in a while. So if you look at this chart, the way it's set up, and because we are comparing it back to the 2008 chart set up here, it's still in this one sequence before the capitulation. So if you look at the 2008, we had the first leg down, second leg, third leg, double bottom, and then it eventually went down. So if you look at the current price action here,